What is going on, everybody? It's Stas here. Welcome back to another video. So the markets did not do well today. We got to break them down in this video. We have to go over the S&P, the Dow, the NASDAQ, stocks I'm looking at, charts I'm liking, and of course, what I'm looking to do in these markets. But before we do that, make sure to get your free money from Moomoo. You get up to 5 free stocks. No joke. Free money, guys. All you have to do is use my link down below, deposit at least $100, and boom, you get your free money as I just knocked over my chapstick here. And again, that's linked down below. And with that being said, let's dive into the video. So like I said, guys, and I'm sure all of you, or at least most of you know, today was not the best day at all. The S&P 500 went down 1% at the close. We had the Russell down 1.4%, NASDAQ down 2.2%, and we had the Dow hold up the best, which is not a surprise. It went down only 0.4%, as the VIX went up about 5%. And if you guys take a look at the VIX, it really came down a lot throughout the day. Earlier in the day, the VIX was pushing 25 points, and by the time the markets closed, the VIX was at 22, which is a big drop in overall volatility, which again, that's a good sign if you're a bull and if you just want things to just calm down, which I personally am on that side. So I like seeing volatility coming down, and we'll talk a little bit about the Fed minutes in a minute here, so, and no pun intended there, guys. But wait, before we do that, let's take a look at SPY and Triple Q so we can see what ended up happening in the latter half of the day. So take a look on this intraday chart. We were pretty much selling off in the beginning of the day. That was in the beginning 30-45 minutes of the session. Then we consolidated from about 10:20 a.m. on the East Coast to about 1:20, so for a good 2-3 hours, and that's where the volatility really started kicking off. I think the Fed minutes came out at 2 p.m. Yeah, right around 2 p.m. we saw a big dump, followed by a massive V-shaped recovery, another dump, another V-shaped recovery, and we ended up closing the day right around 446.50. And just to give you guys some perspective, we were down to 443.50. We ran all the way up to 449. So just that swing alone was a 1.3% swing in SPY. And for Triple Q, probably way more than that. Let me pull it up and let's see. Triple Q went from 350 at the low of that initial sell-off after the minutes came out. And then it ran all the way to about 357, which it ran up about 1.7%. So big, wild swings, guys, throughout the end of the day here today. So we got the Federal Reserve minutes today. The officials discussed how they want to reduce their trillions in bond holdings with a consensus around $95 billion a month. The minutes released, today, that's what they showed. And officials generally agreed, quote unquote, that a maximum of $60 billion in treasuries and $35 billion in mortgage-backed securities would be allowed to roll off, phased in over 3 months and likely starting in May, which, guys, it's early April. Next month is May, and that total would be about double the rate of the last effort from 2017 to 2019 and represent part of a historic switch from ultra easy monetary policy, which I'm not too convinced yet that we're going to get to that point where, it's super hawkish. The Fed's going to just raise rates like crazy. We have to see how things really play out, because at the end of the day, right now, we are not doing that aggressive tapering. The rates are dang near zero, and it's just too early to tell. So we're going to have to see if the Fed really sticks to this, and if we actually do get a Fed funds rate of 3% or more, or if they do really start reducing the balance sheets. And in addition to the balance sheet talk, officials also discussed the pace of interest rate hikes ahead, with members leaning more towards the aggressive side, which we've talked about. Brainard, she was very hawkish yesterday, and we've seen a lot of members say, 50 basis points, it's inevitable. They might do multiple of those. Who knows? So that's what's going on right now. The markets were very choppy, but overall, if you take a look at the markets, guys, nothing really changed. prior to the Fed minutes versus after. We're trading at the same exact spot. We're still consolidating. Triple Q's at about 352, 353. SPY still trading at the same spot it was at before the Fed minutes released, and it's still consolidating around 445. So nothing really changed. Of course, tomorrow is a new day. Everything could change tomorrow, but as of now, we're consolidating, and the markets are holding up, and we'll see what ends up happening again, like I said, tomorrow. So drop me your thoughts in the comments. Make sure to smash that like button if you haven't done so already, and subscribe. That really helps me out in the YouTube algorithm, and you guys know we're trying to get to 25,000 subscribers, so let's do it. Without you guys, it's impossible. Literally, I can't make 25,000 accounts and subscribe to myself, right? So let's talk about some stocks now, and we had a lot of healthcare ones do well today. Did you guys see healthcare today? Oh my goodness. Johnson & Johnson went to an all-time high, which, not to toot my own horn, we called that out a few weeks ago. I started seeing the potential in Johnson & Johnson when it broke out of 174, which was resistance for a good couple of weeks. I mean, take a look, guys. From the middle of December all throughout the middle of March, 3 months, we struggled at 174. So we finally broke out of it, consolidated. I then told you guys we could fill the gap to 180. We did that. And now we broke 180. We're at all-time highs. We just hit 182.60, and pretty much we're in uncharted territory. Like I said videos ago, many videos ago, when we called it out, if J&J breaks out of 180, it's going to be in uncharted territory, and who the heck knows where it's going to go from there, because again, it's at all-time high. So we could be going 185, 190, especially if this momentum in this healthcare, in these healthcare stocks, if this momentum continues. I mean, did you guys see AbbVie? AbbVie's been going up like crazy lately. This stock has been, it's just been in beast mode. It was $100 back in September. Now it's at 170. It's up 70%, if you guys can do that math, 60, 70%. And just today alone, it went up 3.3%. So AbbVie's killing it. J&J's killing it. United Health is killing it. So these are ones that are on fire. United Health today went up 2.7%. So I'm watching all of these. If we get any pullbacks, I think they're going to be good entry points as long as these uptrends are continuing and holding, which as of now they are. Another one I'm looking at is EXR, Extra Space Storage, which I believe this is a REIT. Yeah, it's definitely a REIT. We're going to talk about another REIT in this video, so make sure you guys stick on throughout. Well, it's the next stock we're going to talk about, or in this case, the next REIT we're going to talk about. So Extra Space looks really good. And mind you, I'm not looking to invest in this. I'm more looking at this as a trade. So I don't really care if it's a REIT, a stock. If the chart looks good and there's no negative catalysts, around the company, I'm all for it. And in this case, I'm not seeing anything negative. The chart looks good, so I'm all for it, right? We have a negative, or inverse rather, not a negative, an inverse head and shoulders. We have the left shoulder, head, right shoulder. We're above both moving averages. Today alone, Extra Space went up 3.4%. We took out the highs from last week. I mean, everything is looking good for this to continue the breakout towards maybe the recent high. The recent high was in the end of 2021. It might have been the last day of 2021. We hit about 230, 228. So now that we're above the moving averages, the right shoulder is really starting to gain steam. That is where EXR could end up going. So I'm watching it very closely. The next one here is Mid-America Apartment Community, which is MAA, another REIT here. This one up 2.8% today. It's also, just like EXR, it's also trading at a multi-week high, and it just recently broke out of the highs from last week and weeks ago, which is great. Those highs were right around 215. Now the stock's trading at 217. Again, it went up 3% on the day. So this is great. It's above the moving averages, breaking out of the wedge. I can see this going in the short term anywhere from 225 to 230. You guys can see here 225 was that high point from the middle of March, or not March, December rather, and 230 was the high point from, it's the high on this chart in general, from the end of December. So this momentum we're seeing now that we're breaking out, we could end up going up to those levels, in my opinion. And be careful, one thing worth mentioning is we do have a dividend payment coming in 1 week from today, and they're paying about $1 dividend. And typically when stocks, REITs, companies in general, whatever, pay dividends, the stock price or the price of the asset goes down a little bit that day, and then it usually recovers. Sometimes it doesn't. It really depends. I mean, if it's a crap company, it pays a huge dividend, it might not recover. But if it's a strong company, strong REIT, it pays a dividend, it goes down a bit, it's going to recover. So in this case, watch out for that. It's going to pay that dividend, might drop a little bit that day, and then ultimately recover. So I'm liking overall the way this is looking right now. MAA, the setup is great. GDX is another one that I'm looking at, which you guys know. Come on, you guys know it's a gold miners ETF. We talk a lot about gold stocks. Well, not a lot, like I'm some kind of gold bug or something, but we talk a little bit more than the usual typical YouTube finance channel. Let's just put it that way, because I like having all kinds of companies. I'm not one of those channels that only talks about Tesla stock or tech stocks in general. I throw a little bit of everything, and it makes it more fun for me. And quite honestly, in real life, I look at all kinds of companies. I'm not just going to focus on the tech stocks on YouTube because those videos do better, or, the YouTube pump stocks or whatever, if you guys know what I'm talking about. So GDX, I like the setup. Without getting on a side tangent here, GDX, let's go back to GDX. I like the setup. We have a nice uptrend, higher lows, all that good stuff. We're riding above the 180 moving average, and even though we went down 1/4% today, we're still holding a higher low. Again, we're holding the uptrend, which is great, but what we're noticing here is this ETF's been struggling at $40 for about a month. We hit there back in early March, throughout March a couple of times, and literally just 2 trading days ago, I think that was last week. Yeah, last week, maybe Friday, we ended up hitting 40, and now we're at 38, close to the low 38s. So really, I just want to see if buyers step in where we are now. Will this uptrend continue? Will this start pushing up to 40 to test 40 again? Or is it going to collapse? And if it falls under $35, that's not going to be good. But if it starts breaking $40, we get that huge leg up, guys. That ascending triangle that we're seeing here will play out. And then GDX might be pushing anywhere to the highs from 2020. We might be going to $45. If those highs break, this could be going anywhere from 50 to 55 over time, which if you guys take a look on the max chart, GDX was trading at those levels, even 66, back in 2008, 2010, 2011. So watch out for GDX. I'm liking the setup. Alrighty, guys. So the next one is MRO, which is Marathon Oil. And this kind of has the same setup now that I'm looking at it as GDX, right? Look at GDX. Let's go back to GDX. And now look at MRO. No joke. It's pretty much the same thing. MRO has been making higher lows, but over the past couple of weeks, it's been struggling at about 26, 26.50. So just like GDX, we see an ascending triangle here on the 4-hour chart for MRO. And today, MRO sold down about 1.5%, which isn't the end of the world. In fact, that's good. It's shaking out weak hands. And now we're going to see if buyers step in around $23.50, $24, which is slowly but surely where the stock is trading right now. We're at $24.40, but it could easily drop another 50 cents, and then boom, we're right by the 180 moving average. That is what we've held throughout this whole uptrend for the most part since August, guys. Marathon Oil's been ripping. So if we do get buyers at $23.50, $24, this could find its way back to $26, $26.50, and if the ascending triangle plays out, we could be breaking out to 28, maybe even higher than that. So Marathon Oil, I'm liking the setup. Again, very similar to GDX. And now we have to talk about 2 more, which admittedly they're a bit boring, but they're looking good. I'm not going to lie to you guys. Coca-Cola is also an ascending triangle. We have resistance at about $63, which now we're breaking. Today, Coca-Cola went up over 1%. And we've been making higher lows since the end of September, early October. You guys can see we hit 52.50. We hit about $54. We just recently held the mid 57s, and now we're starting to break out. We're above the moving averages. We're getting a golden cross. Look at that golden cross, guys. So now that we're breaking out of $63, which has been resistance for a good 2 months, I think this, and mind you, today we hit an all-time high in Coca-Cola. I think this could continue going up. I mean, now we're really getting into the mid 60s. We could be going to the high 60s, 67, 68 over a couple of weeks, of course. This is not a GameStop where it's going to move in a day or two, but that is the general direction and where Coca-Cola could be going. And now another one, which is the competitor to Coca-Cola, one of them, Keurig Dr. Pepper, KDP, another one that today it did well. It went up 2.4% in the midst of the NASDAQ getting destroyed. The Dow didn't do well. The S&P, the Russell, everything did poorly today. But KDP went up 2.4%. And we talked about this before. It's in a wedge, lower highs, higher lows at the same time. And with today's move, we broke back over the 50 SMA and we closed right under the 180 SMA. So tomorrow and the rest of this week and next week, it's going to be huge for this stock. If Coca-Cola continues to rip, KDP follows suit because they're competitors. Pepsi maybe starts going up again. I think KDP, if it breaks 38, 38.50, it's really going to start flying. Maybe $40, $41. That's where it could be going. So overall, those are some stocks: J&J, EXR, MAA, and some of them are REITs, like I mentioned, guys. Real estate investment trusts. If you guys don't know what those are, just search my name, StaSurFest, REITs, real estate investment trusts. I have some videos. I think I made one about 2 months ago, early 2022. Go watch that. You'll learn something. And that's what we talked about: GDX, MRO, Coca-Cola, KDP, and we'll see how tomorrow goes. I'd love to know your thoughts. Drop me a comment, hit the like button, subscribe, and join my Patreon if you want all my buy, sells, call outs, morning update videos, plus more. That's linked down below. Or you guys can go to StaSurFest.com/Patreon and make sure to get your free money from Moomoo. You get up to 5 free stocks, each of which could be valued up to $3,500. Just use that link down below or go to StaSurFest.com/Moomoo. Deposit at least $100 and boom, you get your free money. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.